Hey guys, welcome to this week's Money and Investing Show. This week we are doing the 2021 year in review. This has been an insane year in terms of the headlines and news stories, and we're going to try and make sense of some of those and help lay out for what we need to be doing for the year ahead. Hope you enjoy the show. See you in a moment. Hey guys, welcome to this week's Money and Investing Show with me, your host, Andrew Baxter, and as always, my offsider and co-host, Mitch Olorential.
Pleasure to be here, Mr. Baxter, and we've got an awfully light-hearted episode in store today. Probably our favourite episode, realistically, that we record each and every year. That's the year in review.
It certainly is, and man, there's been no shortage of material to run through, that's for sure. It's been a crazy year, one for the books, and I guess as we take a bit more of a light-hearted look back in the rearview mirror at what's been, you're left scratching your head. How could that possibly have happened?
Oh, totally, and it's funny when you look back and, you know, our creative team and ourselves sat down earlier this morning thinking about what are we actually going to talk about, and it was almost like the list went on and on and on. We're going to have to compress this. It should be a longer episode, but nonetheless, there's a lot to go through.
We could do a real-time year in review. It's almost worthy of it. But anyway, yeah.
Really?
You're
Absolutely.
quite right. Let's pin it down. What are the big ones? Where do you want to start?
Ooh, it's up to you. I mean, we could talk about COVID. I think that's probably the obvious one because we all thought that was going away last year, but subsequently really hasn't. That's
right. I mean, it's the second year that we've had to deal with it, and it started off with Delta and finished with Omicron, and it's really quite extraordinary that one thing can dominate global markets, the global headlines, and really still be having the effect that it is. I mean, just recently we saw a big spike in the US as Omicron emerged as the latest in the strain that's there. It's wreaked havoc with the economy. It's certainly wreaked havoc with trying to trade markets insofar as, you know, there are sectors that have been decimated, the travel and transport industry being one, and others that have done particularly well. It's created a lot of opportunities too. Online shopping has enjoyed, once again, gone from strength to strength, whereas, as I say, probably the travel industry particularly has been one that's just been on pause, really waiting for the nonsense to clear up. We're at a stage now, certainly here in Australia and also in the US and the UK, where vaccination levels are at points where you can effectively open your economy back up and get on with business. But of course, that then parlays into let's call it the politicization of COVID, which is something we've seen rampantly amongst our various states and territories here in Australia.
I can't say many people, and I think there's research to back this up, but anecdotally, no one really knew who the premiers were of each state until COVID. Now, these guys are like celebrities. These premiers of states shutting borders, it's almost become like COVID theatre.
It has, and you're quite right. There are people that have been almost no names on the world stage, all of a sudden have really basked in the glory of centre stage, and you wonder how much policy and guidance is about politics, and probably the best example of that would be in Queensland, where we've seen, you can go to the cricket, that's okay, but you can't do other things like go to weddings and things like that. So it's kind of a real sort of peculiar set of measures. State of origin, we saw 30, 40,000 people sitting in a stadium, but you can't have 10 people together for a funeral. It's extraordinary in the way that it's been done, but it's what it is. We've still got, as we speak, one of our states closed off, being Western Australia. Mark McGovern, who we discovered was the Premier of Western Australia, running hot. We obviously had a change of Premier in New South Wales with Gladys falling on a sword, not over COVID, I might add, but ICAC, the corruption allegations, which really, as a politician in today's world, seems to be the norm, where there's going to be some very dirty laundry that comes out and you fall on your sword and off you go. So, it's certainly been a really interesting time, but it continues to weigh very, very heavily on business, on stocks and investment. You take companies in the transport space, Virgin, Qantas, Flight Centre would be three very good examples of that, where you've got companies that are trying to get their employees engaged and get the show back on the road with what is a moving feast, depending on what the policy of the day really is. It's been very, very difficult to get your head around.
I guess it's really been that thing that's affected markets every time, without a doubt. Every time there's a piece of news or a lockdown or a case, it's affecting the stock market.
Markets dislike uncertainty. There's no question about that, and that's well known. I guess it's that differential or distinction between federal and state, and the federal government have been shown not to really be in control or in charge of the economy or indeed the country, held to ransom by various states, and it's still happening now. My father's arrived from the UK. I live in New South Wales. He's been able to fly in, 72 hours of isolation, 2 COVID tests. Happy days, off you go. Whereas if he'd flown into Queensland, he'd been hotel quarantined for 14 days. It's the same country, it's the same virus we're talking about, and the same potential passenger, yet a very, very different way of treating people. So for businesses to try and successfully navigate that, and for individuals for that matter, there'll be families that can't have Christmas because they're not able to get together. So it certainly has been a really dark pull that I'm sure we'll look back in time and go, gee, we really made a pig's ear of that.
Totally. It's really been the talk of the year. If we stick, though, AB, just pressing on, because we've got plenty to go through today, believe it or not, on the political landscape, and that is Mr. Joe Biden, or President Joe Biden, excuse me.
Is he president? Does he remember being elected? I wonder.
Well, he does fall asleep, but good on him. I mean, he's mastered the art of falling asleep with your eyes open. It's perfect, right?
He's mastered quite a few bodily functions. I understand there was he had some flatulence as well whilst meeting Prince Charles and Camilla. So an interesting character. Yeah, it's something that in a time of massive uncertainty, strong political leadership globally has been required, and we've seen in the Western world some major shifts. Angela Merkel in Germany, who's been pretty much this head of state in Germany now for as long as most people can probably remember. The Chancellor there finally stepped down. Boris Johnson in the UK is holding on to office, just, and again you've got Joe Biden in the US, and all of this against a backdrop where I'm sure we'll talk to China in a few moments. But you've had a real absence of really strong, clear leadership and direction, and it's not been the ideal first year for President Biden and his administration. The economy is not in the best of shape. You've got rampant inflation. The major issues of the southern border and illegal immigrants is just gone crazy. You've got this caravan of people coming up from South and Latin America into the US unchecked effectively. You've had the withdrawal of troops from Afghanistan, which was an absolute debacle and really leaves a really poor taste, I think, in the mouths of any veteran or anyone that served their country to see, just how things were left behind, and the legacy that's been left there. It's a pretty poor show. Just strange policies, and then the standard excuse, I don't recall being briefed on that, which is terrifying for someone that's the head of state in the world's superpower.
It's certainly been an interesting couple of months, to say the least, and more recently we've seen the uprising of ex-President Donald Trump on this very basis.
Yeah.
AB, what are your thoughts moving forward?
Look, the issue facing the US is so philosophical, and unfortunately it's probably something that you could talk to in many countries now, particularly here in Australia, where there's such a division. There's no middle of the road, whether it be politics or beliefs about vaccination versus non-vaccination. It's really divisive to a massive level, and Trump politics certainly were that way. There's talk that he may well be making a comeback and have another tilt at the presidency. I'm not so sure that's likely to happen. But the recent poll that I looked at, more people would probably vote for former President Trump to be in office now than President Biden. And that happens. That's part of mid-cycle politics. He's a year into his presidency. He hasn't really accomplished much. There's, the Rebuild Better bill that's gone through, but that's a fraction of what it was originally going to be. You've got a spiral in debt. Hyperinflation almost. Or it's not hyperinflation, but it's certainly creeping up. And there are a lot of issues to really tackle, both domestically and in terms of foreign policy. So certainly it opens the door for someone on the other side of politics there to say, look, we could probably come in and do a better job. You've also got a very, very old president, oldest sitting president, and from what's been portrayed in the media, an exceptionally ill-prepared and lacking capability vice president to take over.
It's scary when you think about it like that, but you talk to inflation, AB, just swiftly moving on here. That really has dominated headlines throughout the year.
Yep.
We've seen bond yields react accordingly in stock markets as well. What are your thoughts, I guess, on the year that it's been in terms of inflation?
With the level of interest rates that we've seen in major markets at the historical low levels, are effectively zero in the US. They're 0.1%, which is practically zero here too. Money is effectively free to borrow, and people will borrow and spend, whether that be in the property market, which obviously has had a stellar run, or whether it's in other places. The cost of capital is nothing, so it's good to borrow to expand. There's been a strong property market in the US on the back of this, but when you give people access to effectively free money, and one of the statistics I heard the other day, I'm not sure if it's veracity, but 99% of statistics are made up. 40% of the US dollars in circulation have been printed in the last 3 years.
That's crazy.
Just to put that into context, and maybe even if that's not entirely accurate, it's going to be within cooey of being ballpark accurate.
There's smoke, there's fire,
and,
right?
And it kind of shows, the volume of money printing that's been going on. And the US Federal Reserve are faced with a very difficult challenge, and it's not really a difficult challenge under normal circumstances with inflation, running, at 5-6% type levels. You wouldn't think twice about raising interest rates, but given the fact that we're coming out of a pandemic recession, there's still millions of Americans not working that were employed pre-COVID. A rise in interest rates would probably check economic recovery to an extent, and that's quite a bitter pill to swallow. And we've spoken about stagflation and various things in that ilk throughout the year. Nonetheless, you have to get inflation under control, because getting it back under control requires a stronger and stronger application of policy measures. If it gets out of control, and at 5 or 6%, you'd probably start to argue that it's getting out of control. Add to that $1.7 trillion in federal spend to make America, rebuild America even better and even greater, build back stronger. It's going to cause inflation as you start to see underlying commodities and building materials continue to push higher on the back of that. It's not much different here in Australia, albeit the number is a little lower, but we're seeing our inflation start to get out of control too, leaving our Reserve Bank with a rather challenging decision. Do they go back on their promise of not touching rates until 2024, or do they do what needs to be done?
The kettle's certainly getting pretty hot. It was only a few weeks back we saw Fed Chairman Jerome Powell come out and say, look, inflation's actually not transitory. We mucked up. It is a serious issue. And that probably poses a conversation here for us more locally, AB, to dive deeper. This year we've seen Governor Phil Lowe of the RBA maintain his stance that it's 2024, but then drop a few hints here and there that it might not. What are your thoughts or rundown as such on this year?
Look, I've been pretty vocal on that from the RBA's perspective, and I think it was absolutely negligent on their part, or certainly in terms of Dr. Lowe's prediction that we won't be touching rates till 2024, for the simple reason that it's lured many people into an overvalued property market, feeling it's safe to borrow because rates won't be moving up. You can't make promises on economic policy based on dates. It has to be on data. And if inflation continues to surge and continue to push higher, $2 a litre for your fuel, $6 for a lamb cutlet, 8% on your private healthcare for the first 6 months of this year, your electricity bill's gone through the roof, your groceries are going up week in, week out. All of these things contribute towards that, denigration in people's quality of life, because the cost of living is increasing and there's no wage growth to go with it. You might then say, well, let wages go up too, and all you're really doing then is adding further fuel to that inflation fire. And you're starting to see fixed rate mortgages, for example, that were beginning with a 2, now beginning with a 3, as the banks are going, look, we're putting rates up because we can see it's coming, and we're passing that on now in advance. So I do think it's a little negligent on their part, and if they happen to fall on their sword and raise rates before then, and I'd take any bet in any size that they'll have to do that, there will be a lot of people that have found themselves in deep financial discomfort because they trusted the word of the RBA governor on a promise he should never have made.
And it's the property market that could suffer looking forward on that. But looking at this year that has been, AB, we've seen the property market just run super hard. We've got clients in this space who invest with us in the share market, but also do a lot in the property space, and ridiculous returns that we've seen. It
is. It's been crackers. There's the official term for it.
Crackers.
And it's been unusual in that normally when you see a surge in properties, it's more localized. Look at Sydney, you typically expect to see, being a major city, post-Olympic boom and GFC, and then just prior to COVID. But this particular, or if you look in the mining space, you look at places like Gladstone, Mackay, Port Hedland that did exceptionally well during the mining boom. This time what we've seen is just an explosion in valuations north, south,
across
east and west. There's been a huge migration, not of new people coming to Australia, and we can talk to economic migration and whether that's the answer. I don't think it is. We've still got 750,000 people out of the workforce. Let's get them in working before we let new people in to do that. It's just silly to pay your people not to work whilst you invite other people in to do so. It just makes no sense. But that's a conversation I suspect for another time. If we look at the migration factor, it's been that movement which is largely driven, I think, by a pandemic and particularly the politics around the pandemic, where there's a surge in people leaving Victoria. You can understand that with Dan Andrews and the way that Victoria has effectively been marshalled through this under martial law. It's had the longest lockdown in the world, effectively. Some of the COVID legislation that's brought in you've just got to question what, why, how are you bringing this legislation in? And it's prompted a lot of people and a lot of businesses to want to relocate away from Victoria and Melbourne to other places. And we've seen that surge in rural areas, regional areas, particularly, and that's pushed prices in those areas too. But basically anything outside of Melbourne and Victoria has done exceptionally well.
It's been crazy, to say the least.
And within there also, you've seen a sort of shift in the type of property that people want. If you've been forced to work from home, that one bed inner city pied-à-terre doesn't really make sense when you're doing everything in one room. The idea of having a house with a little bit more space in the yard is obviously also been a factor. So you've seen quite the distinction in price action between apartments and single dwelling type houses.
Speaking of price action, a little segue here, AB, for a rundown that we've seen this year on China. We talk about iron ore prices specifically, but also geopolitics. Where do you sit now after the year that it has been with China in terms of our relationship?
Well, it'd be pretty easy to argue that things have soured beyond almost a fix from a trade relations perspective. We've seen so many different commodities, whether it's barley, timber, beef, wine, coal, iron,
everything that we produce, basically.
Basically anything that comes out of here is non-gratis, not wanted. and that sort of backfired a little bit during the winter when obviously the Chinese didn't have enough coal to produce electricity to keep their people warm. So there's a bit of a spike there back in coal prices. Obviously good for our coal industry, albeit a dying industry, with net zero being the pledge out there. It's really hard to see the way back. And I think Australia's got to own a lot of the problem within there. China's policies and practices are what they are. Whether or not they comply with the environmental rules and legislation on carbon emission is one example of it. Human rights obviously goes without saying. But the notion of, a united China, we've seen Hong Kong effectively fold back into China. You haven't heard anything about the protests, for example, in Hong Kong since COVID started. Taiwan, will that be the next one? And, the West has really dug in. President Biden obviously said, don't be going after Taiwan. We will not let that happen, if he remembers that conversation. And so that one's a little bit more of a thorny one, but we haven't helped ourselves when we're sending a former Prime Minister, Malcolm Turnbull, will go up to Taiwan for a diplomatic visit and a bit of a chat about trade when all of this is going on. So if you really want to antagonize someone that was your top trading partner and now isn't very happy with you, that's the sort of stupid thing to do. And we've not been that smart in that regard. And that's not to say you've got to placate and be the supplicant in the relationship, but at the same time, there's a lot to be said for not antagonizing when you're trying to rebuild trade and diplomatic relations. So, Taiwan's stance, and I think, China's stance toward Taiwan and the geopolitics, I think is probably one of the biggest risks for markets as we speak. Going forward into the new year, there's likely to be further global tension around that, military tension, the prospect of military conflict. I think that's unlikely. Let's hope not, because that's a net zero for us. That's for sure. We're not going to last too long in that particular fight. But the reality is, let's hope that we're able to build some bridges and things start to get back to where they were in terms of our relationship there, because it is such a crucial one for Australian businesses and our economy, and it's one that needs to be there. I think China's probably one of the single biggest risks though going forward, because they're playing the long game. These aren't playing 4-year cycles like we do in the West on a political cycle. There's a 20, 30, 40, 50-year view of what's going on there, and that's something that we're not really that well equipped to deal with. So certainly one of the big risks on. Talking within China, of course, is the construction sector, Evergrande.
How can we forget Fantasia?
Fantasia and a few of the other developers, they're effectively defaulting on some of their bond debt. 2% of China's GDP in Evergrande alone, which just gives you an indication as to the scale of the business. Not to mention its demand for our iron to produce steel to build. So, if we see a property implosion in China, and there's every chance we may see that, China's gone through, in 2 decades, 2 centuries of capitalization. So, everything's been fast-tracked, and that boom and bust cycle is probably going to be fast-tracked too. So, 90 million empty apartments and properties, people aren't moving around or getting sucked into them. You're probably going to see a fair decline in property values. Kills the wealth effect and will slow the economy down as a drag, and that will affect everybody because it's such a major part of the global trade.
Yeah, it was interesting. And then we saw iron ore prices, obviously, with that come up from $200 a barrel now to thereabouts $90 US per barrel.
Per ton,
a barrel.
Absolutely. That's an extraordinary move. And you think of the big people in our economy, your Rio, BHP, Fortescues have all come off heavily on the back of that, understandably. If what you sell is worth about a third of what it was worth previously, well, there's 70% of your profit margin or not even profit margin, but your gross revenue effectively taken out. And so our miners certainly have suffered on the back of that. And many people out there say, just find new markets. But to find a market on the scale and size of China,
impossible, right?
It's just not going to happen.
Totally.
Yeah, maybe America will soak a bit of it up with their rebuild plan, but it's just not going to be of the same order.
Couldn't agree more. And now getting into barrels, given that I made that error just before, let's chat about the Suez Canal. We've seen the rise and fall of oil. I mean, October we saw ridiculous levels. We saw really high price targets as well for the end of the year, but subsequently oil come back quite substantially.
It's been an interesting one, hasn't it? Yeah, the whole story this year, post-pandemic, as the reopening play, as it's been called, has happened as supply chain issues. And probably who would have believed that the Suez Canal, which is effectively the lifeblood of global shipping, was blocked. Somebody had an accident and effectively blocked it up. And it beggars belief that can happen again in today's world with technology and the like. Nonetheless, it did, compounding further the problems that we've got. And that whole supply chain issue, a lot of people don't realize that, it's not just about shipping something from A to B, but with things like COVID, ports have been closed. There are hundreds of ships waiting to be unloaded, and they're all in line. So everything is delayed. And, that's wreaked havoc. To get a new car in Australia, you could be looking at a 1-year wait list, for example. You look at some of the manufacturers around the world, they've got literally 1 million finished cars ready to hit the market, except for they're not finished. They're missing a couple of microchips, which are essential to running the car. So they're not a finished product. They're just sat there waiting for these chips that are on ships that are in the water rather than at the docks, waiting to be unloaded and pushed through the system. So, I think next year you're going to see almost a glut of supply as things catch up, and there's a bit of an overshoot there. But certainly the Suez Canal, you can't believe that's blocked. So, moving into oil, we saw the surge. The world's worst fear, OPEC aren't increasing production. You're going into that winter season where, heating oil, particularly in North America, is the energy of choice for keeping your house warm. And pretty scary for a while there, and certainly contributed to inflation. We saw petrol prices at the bowser in Australia hit $2 a barrel in Sydney, which is again a major factor for people's financial health because it's a major component of their cost of living. You can't get around not filling your car up. I suppose you could cycle, but not very easy to cycle 4 kids to school. That was a big one. And then the US tapped into their strategic reserve and the world's returned to order for the moment. And it's not just been oil either. We look at the Russians and the stance that they've had on natural gas. Germany, paying, I think, 300% more for its natural gas than it was earlier in the year, which is, a pretty healthy price rise and pretty healthy profiteering on the part of the Russian companies. You can't blame shipping for that because it comes down a pipe.
Totally. And we stick on the topic of profiteering, just moving swiftly on here, AB. What about Crown? What a story that was. How would you even describe it?
There have been probably a couple of real bad examples of corporate governance, and there'll be plenty more besides. But Crown is probably one that really jumps off the page. So Crown Casinos, subject to an investigation into its business practices. I think it was Justice Finkelstein, wasn't it, that was looking at it, and just wrong on every level. They shortchanged the Victorian government in terms of the revenue that they should have been paying on, which they chose not to. Admissions of effectively money laundering and turning a blind eye to various criminal activities just to keep the dough coming through the door. It's left James Packer in a very difficult position. He's under an obligation now to reduce his stake. I think he's 37% or 35% stakeholder
something
in Crown.
like that.
He's got to get that down to 5%. Within 3 years. BlackRock are circling with a bargain basement offer. There's no counter bid for it. So the jewel in the Packer investment portfolio is under immense pressure. And you just wonder from a corporate governance perspective that, by his own admission, James Packer is the chairman of the board and hadn't attended a board meeting for almost 3 years, which is just
negligent, right? Almost.
I don't know how you get your head around that as a publicly listed company where your chairman is not at the board meeting. Maybe he was stuck
Director's
in Cabo,
duties.
or maybe there was a Mariah Carey concert on or something. Who knows? But that one is really interesting, and quite frankly, they're very lucky to hold on to their license in Victoria. Obviously, they would decline their license in Sydney, which was a major shock in some circles, probably not in others, but is probably the right call. That there are rules and regulations in play to follow, and it's not like you trot on the line. You just like the line's in the rearview mirror, 5 kilometres behind where you are. You're that far over it, and it's paid the price for that. And unfortunately, so too have its investors. On the same note, and we've bashed them a few times this year, AMP equally from a corporate governance point of view, I think they'd probably be on the dais as joint winners of the worst corporate governance in Australia this year in terms of what they've been shown to do and the denigration of shareholder value as a consequence of it.
Totally. And if we stick on that theme, maybe just to dive a little deeper in terms of, let's say, not playing by the rules effectively or making your own rules in this guy's instances, and that's Elon Musk and Jeff Bezos. Elon Musk posting on Twitter, hey, should I sell my Tesla stock, which is however many billions, and getting a yes, and therefore dumping, a number of billions. It's quite peculiar. I don't think we've seen that other than this year.
Look, the rarefied air of what's likely to be the world's first trillionaire, extraordinary. So Jeff Bezos, first up, obviously stepped down from his role at Amazon to pursue new interests, and that again is extraordinary. People think, Amazon, it's not been around that long. I think it was 1996 or so.
It's pretty young.
So it's not that old a business. Got the job done. And even post-divorce, he's still sitting at sort of 250 billion in net worth. So quite an extraordinary place to be. And what else do you do when you've got billions and plenty of time on your hands? Start space exploration, and that's what we've seen. So the billionaire's playground now is space exploration. Looking at Elon Musk, and what an interesting person. Worth reading his bio.
He's great. I love Elon Musk.
This is someone that's so totally not motivated by money, and many people will look back at people that changed the world in our era, and Steve Jobs would almost certainly be one of those names that gets thrown in with the work done at Apple. But I think, by comparison, the legacy that Elon Musk will leave behind is something that genuinely has changed the world, right back from PayPal into Tesla with clean energy cars, and a car business which sells a fraction of the cars of a lot of its larger competitors, but is pretty much worth more than all of them added together, which is just an extraordinary measure in itself of what a sort of cost of a slice of the future really looks like. Stratospheric valuations on Tesla, and that's propelled him to the richest person on the planet. And the pundits are saying now that whatever his worth due to Tesla is a fraction of what he's worth because of SpaceX. And again, you look into SpaceX, here's a company that effectively recycles as much as it can and reuses its spacecraft, has created a commercial solution to satellite launching and space tourism. It's really quite extraordinary. And when you put a tweet up to say, hey, what do I do? So I sell 10 billion worth of shares or not? And people go on then, and just to see if you're going to do it. And okay.
And does it?
Does. I don't know quite what the regulator would have to say that. And he's had his previous run-ins, of course, with the SEC and the regulators in the US. But, it's just like, it's so newsworthy. But it's just another level that you look at and just try and fathom what's going on there. It's just extraordinary.
Totally. Richest guy on the planet, probably works more than all of us too, works 24 hours a day effectively.
Yeah, as a man with a purpose. And we've talked, and I'm sure as we get into the new year, we'll talk about goals and goal setting and how to get the most from the year. This is a person that's so totally plugged into what his purpose is, definite major purpose. As way back, nearly 100 years ago, Napoleon Hill would have said, your definite major purpose in life. And he's hooked into it and has been pushing it to the absolute extreme of the envelope his entire life. And it's just incredible to be on the sideline watching it.
Can we stick on that theme of push to the extreme and talk about GameStop and AMC and the rise of...
have got better as the year's gone on. We can't do a year in the review without saying how much better your segues are.
Whilst you're talking, I'm always thinking of segues. That's kind of how this rolls. But Wall Street Bets and Reddit and that whole debacle, stocks moving up 1,000% over a very short period of time, it just really highlights the world that we live in today.
It's people power, and it's harnessing that power, I guess, of social media, where you can have a sort of bit of a user group of people and literally move markets. And that was quite extraordinary to see that, it was a real punch on the nose for the hedge fund industry. I don't think too many people would have been crying in their sleep about that either, but it's been a one-off, and we alluded to that at the time, that the hedge fund industry and the big end of town will get onto that. It'll be a one-off. They won't be doing this again. But yeah, it was really quite extraordinary to see how a small group of people initially could create this wave and literally ramp up a stock that the big end of town, the institutions, were shorting, expecting it to largely go out of business. And give them an absolute flogging. And it was amazing to see, that's for sure. And you look at Robinhood, zero cost brokerage as well with that as a major...
and $1,000 free money, don't forget, when you open your account.
It's such a shift in the way that it's enticed people into financial markets. And that in itself, if I may use a segue of my own,
sure,
has probably been one of the bigger factors in encouraging so many new investors and traders into the stock market. This year we've seen an unprecedented level of growth of first-time investors join markets, and it's not just because markets have been strong, but those barriers to entry of lower fees and maybe having a credit into your account to get started, and the gamification, if you will, of trading has been huge, and it's certainly brought a lot of new participants in the market, which is always great to see.
Speaking of market participants, really hasn't been anything shy of a terrible performance the last couple of weeks, and that is Zip and Afterpay. And it's probably a good way to lean towards the end of today's episode, AB, because believe it or not, you might not know this, on Afterpay now, you can actually buy drinks at a bar now and pay for them later. So you can be knocking back cocktails at Burley Pavilion, as I'm sure I'll be over Christmas.
I think this is hypothetical. I don't think you've ever bought a round of drinks, but that's okay.
No, I don't. But buy now, pay later, you can do it on anything.
That's extraordinary. And again, now you've put me on the spot with that. I think that's almost unconscionable that you can get people sort of on the hook that way. Next thing, you better go to Crown and buy your chips at the table using it too. But it is an interesting space. Is it buy now, pay later, or is it just buy? And that sector has lost a little bit of its gloss. Afterpay was the big mover in that marketplace, as we all know. And their takeover offer from Jack Dorsey and Square from the US was absolutely enormous. $130 ish per share, I think it was, when the offer came out. And as we speak, I think the shareholders have yet to ratify that. From an Afterpay perspective, it's due fairly shortly. But what we've seen is that share price has actually declined quite substantially the longer it's gone since that offer was made versus it being accepted by the shareholders. So one of those things, when there's a takeover, particularly if it's a juicy one like that, if you're a shareholder, it's sometimes good just to get the money in the bank, because talk's cheap but money buys the whiskey. And we've seen that whole sector. Zip has had a torrid year, and Afterpay certainly has come off the boil too, because I think investors that are looking for a bit of pizzazz, if you will, a bit of zing, have also found a new toy to play with, which of course is in the crypto space.
That's a whole topic in itself, and let's draw upon that now, AB, because with that inflationary pressure that we've seen all year, which we've talked of, we've seen really gold fail, but also crypto be that outside of financial markets hedge that investors have been using. What would be your analysis on that?
Look, it's been a really strange one for gold. We're in an inflation environment, as we've already spoken of, and normally when you have inflation, you do see gold as that inflation hedge, that safe haven asset. I think part of the reason why we haven't seen that as much in this particular part of the cycle is that if you're buying gold, you're effectively long US dollars. And we spoke earlier, 40% of US dollars were printed in the last 3 years. So you're effectively taking a long position in an overly inflated asset, being US dollars. And so we haven't seen that follow through for gold as an inflation hedge because it's likely to be a victim given it's in US dollars. There's a bit of more complicated economics in there, and I think we talked to that a couple of podcasts ago. Also, I think if you're looking for diversification and an inflation hedge, crypto has kind of been an alternate to that this year. And I know that kind of sounds a little crazy to compare gold investing with crypto. We've seen large amounts of money go from the self-managed super industry, for example, into crypto. So it's not just a 17-year-old in mum and dad's spare bedroom in his boxer shorts trading crypto. It's been more mature, more sophisticated investors in that space too, myself included. I joined the crypto space this year, purely and simply talking to my barista, who is young kid having a go and is a good young colt. I'm actually doing a little bit of work with him at the moment to help him bolster his knowledge on his investing. He's a really, really nice young kid. And during our conversations, it was like, well, how come you're not in? And it's actually getting harder and harder and harder to find a reason not to be. You've just got to be very selective, either in terms of the particular coin that you go for and the wallet or platform that you're using. Very, very important. A lot of scams around out there too. So yeah, I got into that this year, made some good money on it too.
It's really dominated headlines, and how could you knock it back? Crypto, Bitcoin peaked at 80,000 US dollars, something like that, a coin.
Was that 2 minutes ago? And now it's 50. It's pretty volatile.
It is volatile, but we don't mind that.
No, it's been an incredibly volatile play, but nonetheless, yeah, it's offered, I think, a flavour of asset allocation, a new flavour of asset allocation into the market for people. And as I say, it's getting harder and harder to say why not, provided you're careful, you've got a strategy, you've got a plan, and I guess most importantly, is again, as we've talked to earlier in the year, is matching your investments with your risk appetite. It is very volatile. You will want to have an appetite for risk if you're going to be in there.
Who knows? That could be going to the moon. It could be going down. We don't know exactly. But I think I've actually run out of segues. Is there anything that you'd like to cover that we've seen this year? I'm pretty sure we've ticked off most off from the list.
Look, there's going to be other stories that are just as big that perhaps we've overlooked with those headlines. And I think it just shows what a year it's been when you can have such a spread of things to talk to that are major factors. Normally there's maybe 3 or 4 major factors, but literally we've had a smorgasbord of them this time around. And it's made for, I think, a more challenging trading environment for people. Why? Because we've gone through, if we take the Australian economy, 30 years of economic certainty where we've been effectively in economic growth mode. We had a recession, albeit probably one of the shortest recessions ever. It was 1 quarter effectively. Sure. We have seen record low interest rates, and we've seen volatility, and this is another sort of phenomena of the year that's a little bit unusual. We've got all these factors which are major ones that could influence markets in a good, bad, or indifferent way, causing volatility. Yet if we look at the Volatility Index, the VIX index as it's traded on the Chicago Board of Trade, which is an indicator I use quite heavily, you guys use to help create Signal Screener, you're seeing volatility at historical low levels as it's priced in by markets, and it does not make sense that we're in a market that's so fickle that can move through big moves very, very quickly with, geopolitical China fears, whether it be pandemic fears, and anything else that we've talked of in this particular podcast. And yet volatility is at those low levels. It should be priced much higher. And we've seen some short-term spikes in that, which you always do with volatility. And so far, it's been quite profitable buying those low levels and selling them on those spikes. But yeah, there's another quirky factor that we've seen in markets, and it's made for more difficult trading conditions because lower volatility creates lower options premium, meaning if you're using, say, something like cash flow on demand, your income has taken a bit of a cut unless you're going out for longer or trading stocks that inherently carry with them a little bit more risk. And we've also obviously been in a market that's not been trending nicely up. It's been, at least for the last 6 months, 2 steps forward, 2 steps back. So it's made for quite a frustrating market to try and trade. But these are the challenges. If it was all tea and cake, it would be a pretty boring business. And this is what gets us coming back year in, year out to do battle on the field of what the market is. And the pieces of the puzzle are always different, but they're always the same. You know, it's the same process as the jigsaw puzzle. You put the corners and the boundaries in, look at the cover of the box, and start fleshing out what's going on. And the picture that's been on the box this year has been quite different, and it's changed quite often this year, making it a little bit more challenging. But we're around the corner from next year. That brings with it its new set of scenarios, and even more exciting is a new set of money-making opportunities, and that's what we love.
Absolutely, and I think that's a brilliant way to finish here today, AB. Thank you very much for your input. What a weird year it's been.
What a weird year.
What a weird year.
It's one for the books. It truly
Totally
is. And just as we close this, just thinking about what we've talked about, it's like it's almost exhausting when you think of just how many big headlines there have been. And you know something? Next year will be the same. We haven't talked about Oprah's interview with Harry and Meghan.
How could we forget?
Well, that was spell. I was on the edge of my seat for all of about half a second on that. But but this is the buzzword that we're in. That is headline to headline, and that was something that grabbed headlines for a period of time. And there'll be some other new things into the new year that'll do the same thing. As a trader or an investor, you've got to sometimes take a step back away from that and not get caught into the noise and just work on what your big picture is. And I think over the next few weeks, we'll probably talk to what our outlook is for the year ahead to give people some marker points to aim for, so that when they're looking at the jigsaw cover box, they know what the picture is and how to set their stall out to capitalize on the year ahead, which is really what successful trading and investing is.
Totally. Well, let's hope next year's jigsaw puzzle box cover looks a lot prettier than this year's. But in any case, thank you very much for your input, AB. To all our viewers and listeners out there, Merry Christmas, Happy New Year.
Absolutely. Merry Christmas. And thank you so much for your support and following this year. It's meant a lot to us. And hopefully what we've had to share while sitting in these chairs and their predecessors is help you navigate these markets.
Sure. Feel like a cocktail?
Definitely. Let's go do it.
Let's do it.
Afterpay, 4 payments.
Done.
Thanks very much, Mitch.
See you, AB.
There you have it, guys. What a crazy year it's been. Make sure you give us a review and a rating, and we'll look forward to seeing you next week.